Hey everyone, welcome back. Opendoor stock just lit up the market again on Friday, gaining another 36% in regular trading and tacking on an extra 17% in after hours. If you're following this play, you know we're watching the birth of another potential meme stock legend. So what exactly happened on Friday? Why is this thing still climbing? And what should we be watching ahead of the crucial July 28 shareholder meeting, where a reverse stock split is on the table? Let's get into it. First off, let's talk numbers. Opendoor has now more than doubled in value in just a few trading sessions. Friday's move brought the price above $2.25 per share, and then we saw another spike after the closing bell. This wasn't a small volume day either, over 500 million shares traded hands. That's serious momentum, and it suggests this isn't just a flash in the pan. So what drove the action on Friday? Honestly, it's a combination of things: strong retail buying, a still massive short interest, and growing confidence that Opendoor could actually stage a comeback. The narrative is shifting. What began as a short squeeze setup is now being layered with a bit of hope, a bit of optimism, and a whole lot of speculation. We also need to talk about the psychology of price. The fact that Opendoor is trading well above the $1 danger zone has changed the entire tone around the stock. A few weeks ago, we were talking about delisting risks. Now, we're talking about whether this stock can break above $3 next week. That's a major shift, and it directly affects the upcoming shareholder vote on the reverse split. So here's the deal with that meeting. On July 28th, shareholders will vote to give the board the authority to carry out a reverse stock split. The proposed ratio ranges from 1:410 all the way up to 1:450. It's not automatic, it just gives the board flexibility to pull the trigger if needed. The primary reason for this is to ensure compliance with Nasdaq listing rules, which require stocks to maintain a minimum bid price of at least $1. Now here's where things get interesting. If Opendoor continues to trade well above the $1 level, the urgency for a reverse split goes way down. The board could still execute it, but if the price stabilizes around or above $2, they might simply choose not to do it. And that decision could play a big role in whether this rally continues. Let me explain. Reverse stock splits have a mixed reputation. On one hand, they technically do nothing to the company's value. You're just consolidating the number of shares and increasing the price per share. But emotionally, psychologically, it can feel like a red flag. Many traders, especially retail, associate reverse splits with weakness or desperation. So if the board does go through with a split, especially at a steep ratio, it could spook some of the retail base and weaken the meme momentum. On the other hand, if they vote for it but don't execute it, that could be seen as a sign of confidence. A sort of "we've got the tool if we need it, but we're good for now" message. In the best case scenario, the shareholder vote passes to give the board flexibility, but the stock holds strong above $2, making the split unnecessary, at least for the near term. That would keep retail traders energized and give the rally more runway. Let's talk briefly about what could happen if the reverse split does go through. Say the board enacts a 1:420 reverse split. That would turn a $2 stock into a $40 stock overnight. Same company, same valuation, but much higher nominal price. That might bring in some new institutional interest, but it could also kill some of the day-to-day momentum. Lower float means less liquidity. Retail traders might be turned off by the higher price. And many meme traders who like to buy big volume in cheap names might just move on. So while the split could improve optics, it could also deflate the rally. On the flip side, if Opendoor starts to slip back toward $1 before the meeting, the split becomes more likely, and in that case, it could be seen as necessary just to keep the listing intact. That's when the rally might already be losing steam, and the reverse split just accelerates the decline. So where do we stand heading into next week? This is still a high-risk, high-reward setup. But momentum is very real right now. Social media chatter is increasing. Volume is explosive. And for the first time in a long time, there's a bit of buzz around Opendoor that goes beyond just doom and gloom. Retail traders should watch a few key things. First, the daily volume. If it stays elevated, the meme energy is alive. Second, the stock price. As long as it holds above $2, the case for a reverse split weakens. And third, any messaging or hints from the board leading up to the July 28th vote. If they signal flexibility or hint that a split may not be necessary, that could push the rally even further. To wrap it up, Friday's action was a huge validation for the bulls. The fact that the stock held gains and even pushed higher after hours shows there's still fuel in the tank. The next big event is the shareholder meeting, and how that vote is handled could decide whether this is just another hype cycle or the beginning of something bigger. That's it for now. If you enjoyed this update, don't forget to like, subscribe, and drop a comment with your thoughts. Are you holding Opendoor? Are you bullish heading into the vote? Let's keep the conversation going. Until next time, trade smart and stay curious.